Hi everyone, Donna here with Bookkeeping Made Simple, and today we're going to talk about everybody's least favorite thing in the whole world, and that is the wonderful world of tax audits. Now that taxes have been done, it's time to start preparing for the almost inevitable audit. As if the word taxes was not enough to make your skin crawl, audit is even worse. So don't panic or open that letter for the IRS. Freak out for a minute and then sit down, listen to me. I'm going to tell you what you need to know about the audit process and how you can get out of it unscathed. My name's Donna with Bookkeeping Made Simple. As always, if you enjoy these videos, please like, share, and subscribe. That does help me grow my channel. I try to put out plenty of good content for you, but keep in mind the accounting answer for everything is it depends. So no matter what I say in these videos, as you're applying it to your own situation, remember the applicability of whatever I say is going to depend on your personal circumstance. So feel free to use as needed or reach out to us for further information. So we're all familiar with that stomach clenching feeling of just about being sick when we think about getting audited by the IRS. But don't worry, I'm going to make sure you are equipped with knowledge and the tools you need to survive one. So let's get started. Buckle up. I'm going to give you a breakdown of what I know about them. Well, first thing everybody thinks as they are worrying about audits is that there's only one type, that is the type where you come in and worry, and you're going to be grilled, and it's going to be a long, arduous process. It's not necessarily that way. So let's start with talking about what an audit is. When you're being audited, they're not necessarily looking for you to have done anything wrong. They are simply double checking your records against theirs. There's a lot of different kinds of audits. It happens that the tax audit is the one that people are more familiar with, especially if they are not IPOing or they're not publicly traded. By the way, every publicly owned business, if your business is listed on the stock exchange, you must be audited every year. Did you know that? Not necessarily by the IRS, but you must have an audit done every year. That's not the type of audit we're talking about here. We are talking strictly about IRS audits. And the purpose of an audit really is to test and make sure that the IRS records match yours, basically. It doesn't necessarily have to be to the penny, believe it or not, but they want to make sure that you've declared all of your income and that any exceptions to that, such as deductions, credits, reductions in income, are legal and applicable to you. So that's what they're looking for. They're not necessarily looking to garnish your wages right out of the bat, garnish your bank accounts. They do have those tools available to them. Whether I agree with that is a whole nother video, but the purpose of the audit is to reconcile, basically, to make sure that your records and their records are in agreement. So let's kind of start with that. There's no real reason to freak out. They are not necessarily saying that you've done anything wrong if you are audited, although the first part of the audit, before you even get the notice, is to see if there's anything that is out of balance. Okay. The second step, and this is where a lot of scams occur. The simplest type of audit is the correspondence audit. So the IRS sends you a letter and you basically respond back to it and tell them give them the information they're looking for. Okay, pretty simple. It's not too arduous. They say, hey, look, we want to verify your income. And they want to make sure that again, they just want to verify some things. That's all they're looking for. Correspondence audits are the simplest ones. They send you a letter, you gather the documents, you mail them back. By the way, if someone calls claiming to be from the IRS, let you put your mind at ease instantly. If they call, they're not from the IRS. The IRS never, ever calls. They will send letters, and if you don't respond to the letters, then they get a little twitchy about it and they send people, but they do not call. Okay, that's just something they do not do. So if, like I said, if you get a phone call from the IRS, rest assured it is a scam. IRS never calls. They never call. They want it in writing, so you can call them, but they will never call you. Next, the second type is an office audit, and this is where a lot of people start to get nervous, because that means that the IRS is calling you into their offices for an interview. And the agent is going to review your records and ask specific questions about the return. This one is where a lot of people start to get very nervous, which is understandable. And the last type is the field audit. This is the most extensive type. This is usually done, by the way, when they do think that there is a reason to believe that fraud may be committed. They're not going to commit this kind of resources unless it's a major problem that they're trying to resolve. So that means that they show up at your place of business and they will go through your records. It's not fun for anybody involved. And it's also, a bit rarer. To prepare for an IRS audit. And I come from a scouting family, by the way, just for fun. Our motto has always been be prepared. So to prepare for an IRS audit, some things to do. One, make sure you have accurate and complete records of your financial transactions. This includes receipts, particularly cash receipts. It includes invoices that you are sending out expecting to be paid, invoices that you have received that you need to pay. It includes bank statements, credit card statements, all of your financial documents. Now, back in the day, we used to have to keep all of those paper documents, and I do still recommend this, by the way, for 7 years. Keep your paper documents for 7 years. Today, however, for all of my records and for my clients, I don't do that. I scan them all, and I may chuck them into a box, but I don't put a lot of effort into organizing them like I used to. I scan them all and I save them online so that I don't have to think about it. I'm not moving boxes of receipts. A lot of receipts today are thermal paper, like the ones we get at Walmart are typically thermal paper. Gas station receipts are thermal paper. What that means is the paper is heated up and that's how it prints. So the trick with that is if they are exposed to heat and light, they will go blank or black. So that's why I scan all the documents. I scan all of my receipts and make sure that I have them saved in my SharePoint or OneDrive. And the nice thing about that is I will have them forever. So an alternative would be to take a picture of it with your phone, and then you can either save it in your own electronic filing system, or you can upload it. If you're one of our clients, you can upload it to our servers and keep a copy of it there. I am a data hoarder. I typically don't delete anything. At least in the past 15 years, I don't think I've deleted anything. And so I still have access to everything from about 12 on. So I have 10 years worth of records. And the only reason I don't have anything before that is that the internet was still new. So you need to make sure you're keeping that. They prefer to see originals, but if not, then what you want to do is you want to establish a paper trail. So you want to show the receipts, the invoices, the bank statements, credit card statements, your loan documentation, anything financially related, I would keep a copy of it. And the easiest way to do that, like I said, is to scan, although I would not destroy them afterwards. You want to make sure that all of your income and deductions are properly accounted for and documented on your tax return. Now, this doesn't mean that you have to take every single deduction that's open to you. There is kind of a bell curve. So if you're at like the top of the curve and you decide you are, in order to maximize your refund, you're not going to claim all of your deductions, that's perfectly okay. What they're really looking for is to make sure that the deductions that you do claim exist. Okay, you can say, well, I actually had $30,000 of these deductions, but I'm only claiming 20,000. That's fine. They don't mind if you understate, but they do mind if you overstate. So if you're saying, well, I had $20,000 worth of deductions, but I actually claimed 40,000, they're going to get a little upset about that. And they're going to make you change some things. So you want to make sure that you have the evidence for your the deductions and credits that you're claiming. Well, this is things on an individual return. If you have children at home that you're claiming, particularly if you're divorced or not married. If you have children, you want to make sure you have court orders, by the way, saying what years or that you can claim the children, what years that they lived with you. So school records, shop records, doctor's records. 1 year, my ex-husband, who claims our youngest, was trying to prove that because, by the way, my ex is he's a dual citizen, Mexico and US. And so he spends a fair amount of time in Mexico with his family, usually a few months a year. And so we had to prove that our son was a US citizen. Well, that's easy. And that, because I just showed his birth certificate, and that he was in the US during the year. So I actually submitted pictures of our trip to Disneyland that were time and date stamped. So all kinds of records that you can keep, but I really recommend that you keep particularly financial records. And like I said, if you're claiming other people as dependents, you do also want to make sure that you have the documentation to prove it. Okay, and we're going to go into claiming other people as dependents if they're not your children in another, who you can claim and what the requirements are in another video. You do need to have some familiarity with the tax code. And what that means is you don't have to know every little thing. Most people do look to their tax professionals, people like me and my friend Jenny with Paramount Tax, who's one of our referral partners. They look to us to be pretty familiar with the tax code. The catch is the tax code is massive. You do have to know the basics though. So you should know when it's okay to claim certain things. You should know when you should be, especially for business owners, when you can depreciate something. The past few years, we've had bonus depreciation, which has been nice, but you do need to understand how that works. This year for 2023, that bonus depreciation has gone from 100% to 80%. You need to have some familiarity with it. Capital gains, by the way, is another place where people struggle. They forget that there's a tax on capital gains unless you're selling your primary residence to move to another home. And that can be up to 20%. So it's always best to talk to your accountant about the best way to handle that. Okay. You should respond promptly to any correspondence from the IRS. They don't like to be kept waiting. So if you do get a notice from them, make sure that you're responding to it by the due date. If it is not something you know how to deal with, reach out to a tax professional such as myself, and we can help you cope with that. You can also call their offices. Believe it or not, most IRS agents are quite nice. They're just people like you and me, and this just happens to be their job. I have talked to a lot of IRS agents. They've all been incredibly sweet and very, very helpful. So don't be afraid to call them and ask questions. If you are audited, you should expect an initial contact from the IRS agent, and it will almost always be a letter. Now, some people say that there will be a phone call. I say no, there won't. They will mail you a letter. They do that for a couple of reasons. One is they want to make sure they have a paper trail. So they want to make sure that by sending out a letter, it's much easier to prove that the correspondence went out. It is your responsibility as a taxpayer to make sure your address is up to date with all of, if nothing else, make sure you're filing your change of address with the post office so that your mail can be forwarded to you. You can also arrange to have a service like, I think UPS offers this, where you can have a mailbox and have them actually open and scan your mail for you. But I really recommend that you make sure that your address is up to date, because if they can't reach you, they can prove that the letters were sent out. What you do with it is up to you, and that could turn out to be a very bad thing for you if you ignore them. Like I said, if you ignore them, typically the next step is they'll send an agent to your home or place of business, and that is never a good thing. You should expect a request for documentation and information related to specific items on your tax return. Like I said, we have had to prove that our children lived in the United States for 12 months of the year, or at least 6 months of the year, because of my ex-husband's, by the way, he and I are still friends, because of our, because of his citizenship, because he has dual citizenship and he has a residence in Mexico, we had to then prove that the kids lived with me, which was pretty easy to do. I had lots of pictures, that they were US citizens. Again, easy to do. They're natural born citizens. In his case, if he had not been married to an American, he would have had to submit birth certificates proving that they were born on American soil, or naturalization papers to prove citizenship. But generally that's been done before it gets to an audit. I've had to prove what my income was. That's also fairly easy to do because I'm an accountant. I'm scrupulous with my own financial records. So it's very easy for me to go back through and show my merchant account statements, my bank deposits, the invoices I've sent out, the ones that I'm writing off as uncollectible. That's actually pretty easy to do. Okay, but you do have to keep your records. So they are going to ask for documentation, and it will be related to very specific things. If you do a lot of day trading, keep your 1099-Bs or whatever you get from your brokerage, because they may ask for that. Another place where people kind of get tripped up is vehicles. If you own a business, or if you use your car for business, you can claim certain expenses related to your vehicle. Typically, we will take the highest mileage versus actual expenses, but you need to have a written record of both. You should expect a meeting with the IRS agent to review the documentation and to answer any questions they may have. And then a determination of whether there are going to be any additional taxes or penalties owed based on the audit filings. Or if they owed you money. That has happened too. So sometimes the IRS audits a taxpayer and they find out the taxpayer owes them money. That's the audit everybody fears. However, sometimes the IRS audits a taxpayer and they find out that the IRS owes the taxpayer money. So it's not necessarily a bad thing that you're being audited. If you don't agree with the audit findings, you can appeal it. And that's another thing people forget about. We have special tax courts in the United States to deal with tax issues, or you can file in any federal court. Your attorney or CPA or EA can help you with that. At this time, I am none of those things. Although I'm a fully qualified accountant, I haven't gotten a CPA license yet. But, you know, and I do actually recommend working with an attorney specifically who specializes in tax issues. They'd be able to help you if you want to take it to court. Just because the IRS makes a determination does not mean that is the final determination. The courts have the final say. It is important that you take these audits seriously. And you cooperate fully with the IRS. You want to be well prepared, you want to be organized, and you want to do everything you can to make the audit process smoother. They have a lot of discretion. So if you are good to them, they will try to be good to you too. They want to make sure the law is being followed, but they can also help you understand the tax code better. The better you understand the tax code, the better off you are, because then you have the knowledge and resources to be able to back things up. If you have any questions about audits, or if you are the subject of an audit, I was going to say victim, but I think subject is going to work better. If you're the subject of an audit, like I said in the intro, freak out when you get the letter. We all know you're going to do that anyway. And then reach out to us. Our number is 801-692-0032. And we would be more than happy to help you cope with an audit. So again, this is Donna with Bookkeeping Made Simple, and I will be excited to talk to you again soon.